But Europe is expected to open in seconds from now, and the expectation is that you will see a flattish opening really for the entire Europe. And this is because you did see very strong gains in trades yesterday after the ECB announced its bond purchase program. But there are a number of conditions attached to the bond purchase program. Despite that, the markets celebrated the announcement simply because of the confidence and commitment that they attributed Mario Draghi's comments to, and that's the big reason you saw the markets trade very strongly in the green yesterday. You saw Spain gaining by something like 5%, Italy was up close to 4%, and even London up a little more than 2%. But the big question, of course, on everyone's minds is whether the markets will be able to sustain those gains. And as you can see on your screen, the markets here have opened. It's a flattish gain, really, marginally in the green, as expected. The FTSE up just about 0.18%. Frankfurt should open any moment now. And Paris is the other key index we ought to be looking at, and that's also in the green, up about 0.4%. We've got Brenda Kelly on the phone line with us, who's a market analyst at CMC Markets. And Brenda, to begin with, do you expect that, these very strong gains that we saw yesterday will be sustained in the markets, or somewhere this is all going to fizzle out and people are going to once again start focusing on the fundamentals?
I think it's probably going to see the latter, to be perfectly honest with you. It kind of remains to be seen whether or not Draghi's actions yesterday were actually a band-aid or a bazooka. Now, he did actually seem to do the right thing in the sense that in practice they're going to purchase lots of government debt in the secondary markets, subject to the countries whose bonds have been purchased, in effect, being under the ECB and Commission scrutiny. And these bonds are apparently going to be sterilised, so there'll be no net addition to euro area liquidity. So in some respects, it doesn't necessarily feed into inflation. I'm saying that, though, we have seen the likes of gold prices rise, which does seem to tend to believe that there is going to be some sort of inflationary pressures as a result of this. So I think today, given the fact that we saw L3 over the last year or so, and we saw a similar market rally on the back of that, that I think eventually it'll come down to the fact that, yes, debt may well be cheaper for some of these peripheral governments, but for the most part, it's actually the actual debt, the existing debt that they have, that is really the problem. The reason why a lot of speculation is regarding the euro breakup is mainly because there is a certain amount of issues regarding default from the likes of Spain, Ireland, Greece. And as long as there is that possibility, and as long as they have this unsustainable debt in existence at the moment, rather than any new debt that might be coming on board, there will still be that speculation there.
Brenda, would you go so far to say that the recent upside that we've seen was a little bit unjustified and without significant support from the other surplus nations like Germany and Netherlands, the central bank is not going to accomplish too much on the back of that announcement?
I think in some respects you could be right. Now, you can see that there was one person who did dissent, and that was obviously Mr. Weidmann, and he is from the Bundesbank. So in some ways, that was to be expected. But I think it's really, from the ECB's point of view, it's a time play. So for the states that can't actually raise the funds at reasonable rates at the moment, the fact is that the ECB will intervene and drive them down. But like I've said, at the end of the day, it's not the actual cheaper debt that they need, it's actually less debt. And this is the problem we face, because there is no ability to monetize these debts. There is no sort of will or political will to inflate our way out of it. And of course, you can't really solve a solvency issue with liquidity operations. And this is something that we seem to have learned and not actually put into practice. And the ECB do not seem to be aware of this, in spite of the fact that this has been the case for the last number of years.
Brenda Kelly, thanks very much for joining in with that perspective. And on expected grounds, it seems that the rally that we saw yesterday has fizzled out a little bit, but nonetheless, it's a positive bias for the European markets. We take a quick break right here on Market Sense, but on the other side, Pradeep Chaudhary, Chairman of State Bank of India, joins in.